Yeah, good morning, my people. This is Adejon Adewale, the owner of Trader, owner of Home of Trader. This morning, I'll be talking about support and resistance and their importance. Let me stress that majority, when they talk about price action or tell them join price action class to learn, what they will tell you is it's not support and resistance. I know about it. It's not trend line. I know about it. Now, support and resistance that you claim you know about and yet you're not making profit, there's a big problem. Let me stress that if you want to make any profit, after you understand the market structure, if you have not watched the previous video where I talk about the market structure, I will advise you to go back and make sure you watch it. Once you understand the market structure and able to follow trends, then I can tell you the next thing to learn is the importance of support and resistance. Support and resistance is so important that it cannot be overemphasized. There is need to understand the key support level. We have the major support and we have the minor support. So the role of support and resistance is so important that no one can actually finish discussing it. I will start with support and resistance this morning, and we see how we can actually use support and resistance to trade boom and crash. In my next class, extensively, I'll talk about how we can catch spike. After this video, the next video we're talking about catching spike. And interestingly, we'll try as much as we can to make sure we look at a live trade where we can actually use the strategy to catch spike for real. Let me start. When we say support and resistance, we are expected to zoom our chart out completely like this. You zoom it out completely to the tiny size. This is zoom in. You see, this is zoom out. When you zoom out completely, you go to higher time frame like 1 hour, 4 hours, or day or daily time frame. When you go to this kind of time frame, it gives you a general overview of what market is saying. You can even come to monthly, that is the monthly time frame, or you can go to weekly time frame, you can go to daily time frame, depending on what you feel like using. But advisably, you can start with daily and then downward like that. That will give you a general overview of what market is saying. When we say we do top-down analysis, these are what we call top-down analysis. Ability to be able to digest what the structure of the market is what we normally refer to as top-down analysis. Today, I'll be talking about support and resistance. I'm going to tell you we have what we call dynamic support and dynamic resistance. And of course, we have what we call the rigid support and rigid resistance. I'll quickly advise you before I move on to ensure that you watch this video from beginning to the end. If you actually know that you want to keep making profit in trading, there is need to digest this content. Watch and rewatch it. Again, if you are watching this video in our channel for the first time, there is need to subscribe to our video. Click on subscribe button and click on notification bell so that each time I upload a new video, you are going to be alerted by YouTube that a new video has been uploaded by Home of Trader, which will enable you to be able to watch the video on time. Again, click on like button and make comments. This is the only way at which you can help our channel while we train you free of charge. Let's start. This is a daily time frame. Looking at support at daily time frame, we click on our support line. This is a line here. We are going to be looking at a key level like this one I marked here is a key level at daily time frame. We're going to mark another one here. Also, the rules of support. For support to be effective, many of us are drawing support line. We are drawing resistance line and support line. But for our support and resistance line to be effective, there is need for us to have a more touch. When I say more touch, let me quickly explain to you what I expect by refer to by more touch. See, this is a touch here. I want you to follow me up. If you actually determine and that you want to know how to trade this effectively, this is a touch here. Can it be duplicated? No. Okay, let's go. This is touch here. You will see it's being respected here. It was broken there, then came back to return. If I zoom it out, you see what I mean. It was, if I zoom it in, you see what I mean, because it has been zoomed out. Ensure you wash this thing to the end. This is another touch here. The more touch a support or a resistance is having, the more effective it is. This is another one here. Okay, I want you to listen very well and watch this thing over and over to digest the content. This is another one here. Another one is equally here, and then this is just a stop hunt here, which we're still going to be discussed in the future video. Now, if you look at this support line, this is a support line here. At this level, it acted as a resistance. We call it role reversal, or we call it a flip zone. It's two things depending on who is taking it. Some will say when a support is broken out, okay, the support is support, this is a resistance here. It acted as a resistance here. Then when it got here, it broke it out. It went up a little bit and came back to retest it. It went up a little bit and it came back to retest that area, as you can see it, thereby going up. Then it became a support, resistance here, then a support here. The role have been reversed. Therefore, we call it role reversal. Sometimes we call it flip zone. And one definitely it came back to retest it here. You can see they always respect this level. Okay, this is crash 500. They always respect this level. When you got to this level again, it keep moving up. Okay, the role has been reversed from support here and becomes what? A resistance here. Support and resistance is so important that you cannot play with it. Okay, let's go to a little bit to lower time frame. Let's say we go to 1 hour time frame and we try to look for the effect of this thing we have drawn. As you can see, excuse me, as we can see here, the support here was broken out here, and of course there's a retest. After a retest, the market start going down. Okay, this is the importance of support and resistance. They play major role. After you are able to mark your support and resistance at higher time frame, like this and like this. Okay, here is respected again. Let me change the color of this one. Draw at background. Okay, excuse me. Now here it was broken out. It came to retest this area, then down it goes. It came to retest again, down it goes. But here it was a support. After as a support, it broke it out. After breaking it, it went down a little bit, then up it goes. Now let's go to 15 minutes time frame where our entry is. At 15 minute time frame is where we call majorly our entry. Now if you look at it at 15 minute time frame, this is the line with you at 1 hour time frame. You can see they are equally respected. When the market got back here, it went back up. When it came to this place, it went back. It went as if it's going back. Then later it broke the market structure, then down it goes. You are not looking at entry today. You are only looking at rigid supports and rigid resistance. This is another one here. As you can see, it was respected here as a support. It broke out here. It came back here, because it was a really respectful area. Of course, so many activity were going on around here, and the market was like playing around your support and resistance. Then eventually it broke out. They went up, test it, come down, test it, come down. Don't worry, I will tell you in the next video how you can actually manipulate all this area you are seeing. How you can manipulate all this area you are seeing. Here is a touch here. Here is another touch here. Support being respected. Here is another one here being respected. Here is another one here. I'll tell you stop ons. What happened here? I'll tell you when I was talk about candle pattern. Here now, for those who knows what this thing is actually saying, they will have tell you, they will have let you know that at this level here, what you're having here is what we call head, shoulder, head, shoulder, and it is time to enter. For those who understand the chart pattern, we call it chart pattern. This is shoulder, head, shoulder at a major support area. Why is it a major support area? Because it has been tested and confirmed several times. If you look at it around here, it's still the same support. All these ones are respecting here around here, you can see. Then here now it came to test it, it went down, test it, come back, then test it for the third time. Now it has formed what we call head, shoulder, head, and down it goes. That is it. It came down all to this area where we have another support. As you can see, if I move this thing inwardly, you see what I mean. That a major that support have been tested and confirmed several times, and that is why he was able to respect it. And he came to this place again. When he got here, he respected the support again. Up he goes. After getting here, you should know that he's going to respect here again and it's going to go down. So that is majorly our support. We call it rigid support and rigid resistance. That's what we call this one, rigid support and rigid resistance. Let's look at 500. Let's say we are on crash before. Let's look at boom 500. Boom 500. Boom 500. Still dealing with support and resistance. On boom 500, we start from, let's say, daily time frame for our analysis. Let's start with daily time frame for our analysis. My internet is slow, and that is why I look as if the chart is dragging. Nothing more. I have a slow internet here. Okay. I want us to listen very well. This we are learning is highly essential. Okay, I think it has zoomed to an extent now. Let's begin to look at our major support and resistance. Here I will start with this area. Okay, that is one. I want you to follow me clearly. This is another one here. Okay, here another one here. Okay, and of course we have another one around this side. Let's just say here at higher time frame. These are major. We go to 1 hour time frame. As you can see, the market is getting to this area, is respecting it. The same thing is happening at this area. We will see what will happen next at this area. Market is going to get here and possibly bounce back and go up. But at 4 hours time frame, we have some moves around there, which I'm going to change the color for us to identify the support at higher time frame and that of lower time frame. Okay, I'm using yellow color for the support here. Resistance here. Okay, If I'm able to move it back a bit, you see what I'm talking about. Okay, I have another area here. Okay, as you can see, the area are well respected. If you notice very well, we have one here, we have another one here, we have here. Those are resistance. Each time they get there, the market always crash. Each time they get here, the market is crashing. You see, but inability to exercise patience or inability to understand the concept of support and resistance is affecting majority of us. If you are able to understand the importance of rigid support and resistance, then you will know what I am talking about. These are called rigid support and resistance. I'm going to lower time frame now. I'm doing my top down analysis. I'm going to 15 minutes time frame. Let's go to 15 minutes time frame and see what is happening. At 15 minutes time frame. Oh, what happened? Okay, we go to 15 minutes time frame. Now 15 minute time frame, you can see that this major area are equally respected, as you can see them here. They are equally respected, and they are acting as a support here. It's turned to what we call a row reversal. A row reversal. Why the market failed to pass here is simple. It's simply because we have another issue here, like we have here. You can see here have been respected in the past, and definitely when you put your line here, they are called minor supports because they are not from the higher time frame. When you put your line here, definitely when market gets here, they are going to respect this area and go. When market keep coming to touch this area and go back, definitely you should have known that the resistance above is going to be broken as soon, very soon, and that was exactly what happened here. This is all about rigid support and rigid resistance. Let's look at dynamic support and dynamic resistance. Okay, we said we'll be looking at dynamic support and dynamic resistance. Before we move on, remember this is home of trader. You can join our Telegram group, you can join our WhatsApp, where we post a signal for trade and all that, where you meet a lot of trader assisting each other in the group. In the group, we don't allow adverts from anybody, but you can always come around and share your knowledge with every other members of the group. This time we're moving back to our chat, where we are going to be looking at dynamic support and resistance. Don't forget to support this group, this channel, by simply liking our video, subscribe to our video, make a comment. Okay, now let's look at what we call the dynamic resistance after we have been able to look at rigid support and rigid resistance. Now, what are dynamic support and resistance? Dynamic support and resistance are your trend lines. First, let me clean the one I have done on my chart. Okay, now let's look at dynamic support and resistance. Like I said, dynamic support and resistance are our trend lines that we normally use. Trend lines are normally referred to as dynamic support and resistance because they play the role of support and resistance, but not in a rigid form, of course, in a dynamic form. Now let's look at them. Remember the rules that when we are at support, we are buying, and when we are at resistance, you are selling. These are major rules that you must know. For instance, this is a support. Each time the market comes to touch your support line, then you buy. and each time you get to resistance as it is here, then you sell. Each time you get to support, you buy. Each time you get to resistance, you sell. But you don't just sell at resistance, you just sell at every support. There are major support and major resistance where we normally buy or sell, which we are going to be looking at in the next video. Okay, that is for that. Now let's quickly move on to dynamic support and dynamic resistance. Ensure you finish to watch this video from beginning to the end so that you can understand the concept of what we are talking about. Now this is a trend line. When the market is in a downtrend, you are expected to draw your trend line below, that is under it, when the market is going down. If you look at our first video where I talk about the downtrend, which I call the bearish trend, and then the uptrend, which is otherwise known as bullish trend, you will understand that downtrend, when it is going down, we have to draw our support trend line below it like this. If you remember, in a rigid support, we draw it in a horizontal pattern, while this one is in a diagonal pattern. That's why it is called dynamic support. It is a support because it is under your candlestick. Each time candle get to your support in a downtrend, it's going to be bouncing back. It's going to be what? Bouncing back. So this is a dynamic support at a higher time frame. Now the best time to use this one is at higher time frame. Once you're able to get at higher time frame, then you go to lower time frame to look for entry. Just like as it is going here in this current chart, you are expected to draw your dynamic support here like this. Make sure you have a major touch like this. Two things: we have trend line breakout trader, and of course we have those who only wait for that market, that's your candlestick, to come to the support and bounce before they enter. As it is, here is an entry, here is an entry, here is an entry, here is an entry. The same thing is applicable here. Here is an entry here. Of course, here is another entry here. Here is another entry here. Each time they come to your dynamic support or resistance, you enter. Remember, when it's in a downtrend, what I say, when it is in a uptrend, we draw our trend line under it. When it's in a downtrend, the trend line should come up. Downtrend, your trend line is expected to be at the top like this in a downtrend. Yes, and your entry will be each time there is a touch at your trend line. Each time there is a touch at your trend line. Each time there is a touch at your trend line, that is your entry. But mind you, a trend line, either supportive trend line or resistance trend line, is going to be valid when you have first touch, second touch, and third. Your trend line is going to be valid. This is the first one here. Let's say you have one. This is the second one here. Two. And of course, at the third one, you are expected to enter. Three. You are expected to enter at this third one. This is one. Let me relabel it. Let me increase the size so that you can see it clearly. This is one. That one is not big enough. One. Okay. This is two. Two. And of course, on the third one here, this third line here, we already wrote 3 before, but I'm changing to color. This is 3. So this third one here, where you have 3, then you are expected to enter. this is another entry here. Since you enter, you can see it didn't come to touch the resistance again until it got here. Then you are expected to enter. Now for trend line breakout, this is where they enter. But I always tell people not to trade a trend line breakout yet. Why? Because the trend line has not broken the market structure yet until it's able to pass the level of the previous test. If you look at market structure that I treated in the first video, you will understand that I talk about what we call break in market structure, that the market structure is yet to be broken when it has not broken the last swing high. Look at it here. Since here have not been broken, therefore we say the market structure is yet to be broken. You can see that here and here are on the same level. You only come there and test it, which is under a rigid resistance, which I have discussed today. So if it has not broken this level, therefore you are not expected to say the trend line has been broken out. But for those who normally scalp, once this place is broken, they quickly enter and keep scalping. But sincerely, you are putting your money as risk sometimes when you enter at this kind of level and you don't know that market is going to reverse. Why? Because this level has not been broken. Until this level is broken, this level until this place to this place is broken, before we can say that of course the market structure has changed and market is going other way around. Something is applicable in this second one we have here, where we have each time we have number 1 here, we have our 2 here, and of course the third one here. Okay, here the third one here happens to be our entry. The third one here happens to be our entry. We enter here, we enter here, we enter here again. As it is, we are waiting if the market is going to come to this level again before we enter. If the market not come to this level, then it keeps going up and up and up it goes. As you can see, this is how we trade dynamic support and dynamic resistance. What we need to do is to exercise patience. Market is going to pay you your money when you are able to discipline yourself. If you are not disciplined, if you are indisciplined, you will pay for it big time. The only way you can actually be a successful trader is to be disciplined, and discipline comes in when you are able to wait for the right time to enter your trade. You must have an hedge in the market. You don't just place a trade. There must be a reason why you are placing a trade. If you don't exercise patience to wait for those reasons and you just place a trade blindly, then you will pay for it big time. Don't forget, this is Home of Trader. This is Home of Trader. Our phone number is right here. Subscribe to our video, like our channel, join our Telegram, and of course share the video with your friends. Don't be greedy. If you are getting it free, then there's nothing wrong. You share it with your friends. If you are willing to learn this thing in details and deeply, of course you can join my channel and private chat me. On the screen is my WhatsApp number. It is boldly written there on the screen here. This is my WhatsApp number here. You can private chat me. If you want me to mentor you, of course I will do that for you. Private chat me. Let's discuss on how you can have an hedge in the market. Thank you and remain blessed. This is Adewale Adedio, the founder of Home of Traders.